Good morning, YouTube. This is on a Monday morning, 8:34 a.m. on 16th of June 2025. Last week, Dow Jones had a very big drop due to Israel launching an attack on Iran. So right now, the market responded by dropping by about 700 plus points. Let's see the chart for now. The chart shows that it's still at the resistance zone here, which is as usual it resisted. So it should be coming down and maybe it will get supported here, maybe. So we won't know until it really happens because what we can only do is estimate and guess where it might go based on past records. So there's no 100% to it. Maybe 70%. Just most importantly is you know how to react. So imagine a scenario is you make your guess, your estimate that it will continue go up on here and then continue going up like this. But then if some kind of big event happening and because humans are very unpredictable, so if they happen some kind of big things like a mass massacre or something, a big event like COVID or something, the market will react to it. So you do not stick to your initial estimate or your initial prediction. So you predicted that it will step all the way up like this, but then it happens something huge here, and you see that the market is turning red. So do you continue to stick to your prediction going upwards, or do you rechange your outlook for the market? So you should react to the market instead. Do not try to force your way up your prediction that you will be right eventually or some kind of like that. So just like this estimate, okay, there's a resistance zone and then it just bounce back down here from here. So if this support area really breaks down, this daily chart. So if it breaks down, expect it to go down eventually. But then for now, it should be relatively safe because it's above the 200-day moving average. So you have to react when something big happening like this kind. If there's a big event like 9/11 or something like that, market will drop. The market will drop no matter how you think the market should perform. All those are irrelevant anymore. So you have to estimate, take into the account of unpredictable events. So if you estimate your if you go up, anything happens here, you react to it. Like if you see suddenly there's no slow of momentum because no one knows it will happen, right? So if there's no one know when it will happen, you won't see any sell or low in momentum. So just if anything big happen, just follow the herd and just exit it. There's no point waiting for it. You either exit on the same day as everyone rushing for the exit, or you can exit on the second day because normally the second day should have some kind of rebound, a small rebound. Let's check out the 15-minute chart. Or should I check out? Yeah, 15 minutes should be good. But there is some subtle signals. If you can see here, this is the highest high. Then it created a lower high here. So this is the neckline, the support. If it breaks, it will be going down. But then the moment you see that this, actually, okay, I remove these things first. The most importantly, if you identify it, is this kind. A double top comes down, a weaker rebound upwards. During this weaker rebound, if there's a major big candles happening here, you should exit the market. Do not try to hold it because when a big candle like this kind of huge falling candles, it usually indicates something very serious is happening. So it happens. It applies to everything: stock, index, cryptos. If you can see a big candle like this happening, you should exit the market. So do not wait until it breaks this one. and thinking that it will bounce back up. When there's a big candles nearing this moving average, it usually means it will continue going down. So uh, now you can see here, people are starting to react to the news more positively. Maybe they are hoping for some kind of maybe ceasefire or something. Let the cooler heads rule and let things improve themselves, and everyone just sit down and start talking maybe. So we won't know those kind of political geopolitical issues and military stuff, so we can only guess based on the market reaction and also the chart. So as you can see, this is a immediate reaction. People are thinking that it has gone down too much and it's time to buy in, and you can see that people started buying here, and then you can see all those candles are getting smaller. The downward momentum slows down and they bought it in here. Most probably they'll sell on this weaker momentum here. So these kind of intraday traders are very good at their job, very good at trading. So then the seller takes over control and then push it down again. So during this push down, you can see that the momentum starts slowing again here. So we might expect some kind of move upwards here, maybe a lower high. I expect a lower high because this is all the high. So I expect maybe somewhere around here, then goes back down again. If there's a reverse to the upside, most likely it will have another make a double bottom before going upwards. So we'll see how it goes, because we can only estimate and guesstimate. So if it really goes according to your plan, just follow your plan. If it doesn't go according to your plan, just exit. Do not try to hold your stop. Let's say you look at the weekly chart and says, oh, the market is still on a strong upward trend, so I should be okay, right? If I just hold my position here and then wait for it to bounce back up, it might happen. I'm not saying that it won't. It might just go down here and some kind of ceasefire or some deals come up and then it goes straight up. It might happen this way also. So you can just pull together a few scenarios, what you can expect. So let's say if you are holding it here and intend to go for it to go up, expect some kind of loss, major loss, because this from here to here is like 1,000 plus points. So you might say you want to put a stop loss here. Okay, that's fine, because everyone has different risk ratio. So I might not be risking 1,000 plus points just to make unknown points. So it's not really a good thing. I will most probably exit here and wait for a better entry if the condition improves. Like this kind, if it pulls down, it might enter here. And then if you see the momentum slows down here, this is a safer entry to go back upwards instead of holding it here. I don't recommend holding this kind of stock, because who knows if situation deteriorate further and then it's crash down all the way down to back to here, and you might have lost, wow, how many thousand, 5,000 or 4,000 points. That's points, not dollars, points. You're going to lose so many points here. So I don't recommend people trading this kind of risky play. uh, So you have to react. You have to react to any changes. If there's a further big change, just exit. And as you can see, even on a 30-minute chart, you can see clearly that there's weakness already in the market. It means someone has information that Israel will launch an attack on Iran, and then they start selling at the market. So this is a clear-cut insider trading, in my opinion, because you can see this this kind of symbol, because this kind of selling is most likely they got some kind of news, and then supported here. The people that don't understand, don't know the actual truth, they will try to enter here, because hey, it's looking good if without this part, right? Because You can see that it's supported here, and then it's most likely to go up. So yeah, in any analysis, if you do yourself prior to this move upwards, let's say the cutoff point is here. You look at this part, all this upward trend is still moving, and the moving average is still looking good. A pullback, a serious pullback, because it has gone up quite far from this one. So a serious pullback, momentum slowing down. You think that this will continue upwards, so you enter around here when the momentum slows down, and then it goes up. It did go up, but then the momentum slows down. If you didn't exit when the momentum slows down, as according to my trading plan, I should have exited here. So if someone that is greedy, that think you might try to retest here, you will think that you will be holding it all the way up here, but then instead the first red candle appears. So normally, if you didn't exit here and you see a big red candle, just cut your loss and exit. Run away. Don't look at your profit anymore, because it's not happening. You held from here to here, and then suddenly a big crash downwards back to here. So you could be marginal exit, or maybe even a small loss, but just get out, or else you will be holding it all the way down here. So this is not a good way to trade your stock, because from here 42,800 drop all the way to 42,200. So there's a lot of loss here if you held on. Always exit when the momentum slows down, and also when you see a very big candle appearing. So it's not a good thing to hold and pray for it to go back up. Oh, there's a lot big motorcycle going past. So yeah, just wait for it to bounce back. And for now, it is still weak, because the 30 minutes still shows very strong downward momentum. Even the hourly, okay, hourly shows that it has reached the 200-hour moving average, which is a good thing. If the momentum slows down here and makes support, you can enter maybe. If you have a better risk, you can hold on to the risk. Of course, a disclaimer that this is based on my trading method and is for entertainment purposes. So if you want to buy according to what I have said, please know that you are buying based on your own trading, and do not try to base on mine. Also, do your own homework and understand the risk involved, and you might lose money trading. Okay, everyone lose money trading actually. If someone tells you that they don't lose money ever trading, better check out their accounts another time, or a few more times. Most probably you'll find something there. Everyone lose money trading. There's no escape from there. So expect some kind of resistance here, maybe. I'm not saying it will. I expect some kind of move here, and maybe stabilize, and then it might go up, retest here, or it might just crash down again if situation worsens. So we won't know where these things are going until it happens. We can only predict where it might go, although the weekly chart still grows strongly, but because humans are unpredictable, these are human actions. So don't forget, this is a very important note. Do not forget that this is a high, this is a lower high. Let's break the previous neckline. It's now retesting the neckline, and if it pulls back down, it might pull back down all the way to this moving average again. Retest this one. There's a 4,000 point loss, so there might be something fishy going on here, and momentum slows down, and then boom, crash all the way down here. So just be careful. Yeah, this is weekly chart of Dow Jones. So this is a very serious thing. So if you plan to enter short-term trading, maybe a week or a few days, then you just go down to a lower time frame. But if you plan to hold this stock and expect it to continue going upwards, I mean this Dow Jones index, any stocks within this Dow Jones index, So expect some kind of pain going on, especially when it goes down all the way down here. Well, it's very painful to be holding this thing. So if you are a fund manager or some fund related trader, most probably you think of exiting here because of the geopolitical problem, riots and everything going on in the US, and also the Middle East are going down right now. Russia and Ukraine is still ongoing, so anything can happen. So if these kind of things actually pull the market down to this level, so just be careful because this is already a sign of something happening. Lower highs, like breaking the neckline, retesting the previous neckline. So it might just turn around and crash down. So it might. I won't say it will be because there's no guarantee, no 100%. If I did 100%, I won't be doing YouTube already. Yeah. So yeah, I won't be doing YouTube if I can predict 100% of where the market is going. So I'm just teaching you how to predict things, how it might go, how to react to the market, how you should trade the market. So, like this kind, if you see that it's going down, expect some kind of move upwards after momentum slows down, buyers coming in near to the moving average. So, you can just buy somewhere around these areas. And then for the next few weeks, the market goes up all the way down to 42,000 level. You can start selling if you are not that you if you are selling this all the way up here is also a good strategy. You will make some money in the long term. So yeah, do not try to like this kind. Okay, this kind. See here. Okay, let's put this here. This is also a very painful experience. When it goes down here, see momentum slows down, you buy in here, and then it goes all the way up here. You notice that the momentum is slowing, right? So you are exiting here, but then the market is still going upward. It happens because this kind of a very laggy move is people are unsure where it will go. So you think that, oh, okay, I exited here, and then spend the next few weeks looking at the market still slowly inching upwards, and then a pullback, and this kind of move upwards here, you see momentum slows, you think, oh, it might continue upwards, you buy, and then it goes up and momentum slows again. So you're thinking whether you should exit or you should hold on to this, because there's basically non-existent momentum here. It's like a lack of signal. I'll most probably exit here because it's no point holding on to something like this. But this is an index, so if this happened to a stock that you're trading in, you see this kind of move, just exit it and go to a next stock. No point waiting for it to turn this kind of thing, because you're wasting money. You wasting time, you're wasting the money. Understand? So yeah, let's try not to make this video too long, because I think not many people will watch that long. So yeah, so trade safe and check out my older videos. I did make a few long videos in the past few weeks, so check those out and trade safe.